In this week's Property Insider Chat, Dr. Andrew Wilson and I discussed the latest housing figures for the month of May, and it's the fourth month in a row that house prices have increased, suggesting that we've moved from a bust to, well, he wasn't prepared to say the word boom yet, but boy, have our markets had a remarkable turnaround. So to keep up to date with what's happening in real estate, subscribe to this YouTube channel and join 2 million other viewers who've kept up to date. And why not click the little bell icon so you know each time a new show comes out. We've all heard the forecast, the naysayers and the pessimists warning us of an impending doom, predicting a housing market slump due to skyrocketing interest rates and inflation. But the real estate market seemed to have had other plans. Here we are witnessing the grit and resilience of Australia's housing markets. Over the past 4 months, we've seen a sustained upturn in the housing markets, which has defied the forecasts and shaken off the fears of the naysayers. So I'm looking forward to my chat today with Dr. Andrew Wilson, Australia's leading independent housing economist and chief economist of My Housing Market, to hear what his data shows has happened to real estate prices over the month of May. Hi, Andrew.
Yes, hi, Michael. I'm wondering if this is the greatest turnaround in outlooks for housing markets in our history. We've gone from 10, 20% bust predictions plus for 2023, and now we're thinking about rolling out the other B word, which is boom. You know, have we gone from terrible bust to a remarkable boom in the space of months? And I'm not sure how all the doomsayers can justify this now, because it really does make whatever methodology they're using very, very thin in terms of, reliability. But yes, we've had a very strong May month, Michael. We shouldn't be surprised. We've had accelerating clearance rates in our weekend auction markets that we look at every week. And we know that that's a very reliable sign for what's happening broadly in housing markets, particularly with house prices. And yes, no surprise, we've got house prices accelerating over May.
Well, the housing bears seem to have gone back into their caves and hibernated, and one by one, each of the bank economists and major economists have changed their tune. And like you, they're now talking about a housing boom ahead. So each month you bring out the national housing median price figures and national unit figures. What have you found happening to our markets over the month of May, despite an interest rate rise?
Yes, despite an interest rate rise, the theory behind higher interest rates and lower prices is again challenged, and history tells us it's not necessarily cause and effect. And, as soon as interest rates start to rise, all the bears come out and start talking doom and gloom for the housing market. And again, they've been wrong. It's almost to the point where those that sort of trade in hysterical headlines, we tend to ignore that anyway, because we know there's an agenda there, and that's just, media coverage. But when we see the major banks whose primary business is the housing market getting it so wrong again, I mean, they look absolutely foolish to consistently get predictions for the housing markets wrong. And it's not just that they're wrong in the wrong direction. They're always predicting down, and it always ends up. So I think there must be a conversation surely happening about the capacity of the economic departments, particularly in relation to housing market insights in the major banks. And you wouldn't want to be following their predictions, would you? Particularly when we have the latest data over May shows an accelerating housing market, Michael. The national capital city quarterly median house price increased by 0.9% over May. That's over the May quarter compared to the April quarter. That's the strongest increase this year, the fastest rate of growth recorded over any of the monthly quarters this year so far. So far from a falling housing market, we're getting a housing market where prices are not just recovering and rising, they're also accelerating in terms of the rate of growth, Michael.
Not only have house prices risen, but they've continued to rise. So those who were suggesting we had a dead cat bounce, it was just a one-off, that's actually proven not to be the case. And there are multiple factors confirming our housing markets have moved. It's not just house prices, it's unit prices, auction clearance rates, days on market, fewer properties being withdrawn from auction, and increased both buyer and vendor sentiment. But there also seems to be a swing to apartments as house prices have become more expensive, Andrew.
Yes, well, we've also seen national unit prices accelerated similarly to houses over the May quarter. I think the only dead cat bounce that's happening here is the bounce from credibility. That's certainly flat as attack at the moment from those that have got it so wrong again. When we look at capital city breakdowns for house prices, Michael, we saw every capital city once again, house prices increasing over the May quarter. Exception was Hobart, where prices were flat. Sydney led the charge of the major capitals, up by 1.4% over the month. Canberra, which has had a flatter period really this year after a strong period of growth last year, it was up by 1.8%. So it exceeded Sydney, and so did Darwin. But Canberra and Darwin, smaller markets, tend to be a little volatile despite having quarterly measures of growth rates. But yeah, Sydney up 1.4%. And of course, that was a major contributor to the national market rising by 0.9%. Sydney is the clear leader over the year so far, up by 4.9% so far this year. House prices, but still down by 4.8% this year so far. So over the year, the first 5 months of this year, Sydney house prices still down by 4.8%. Melbourne likewise down by 4.3%. But I do think that Sydney and Melbourne particularly, that of course recorded the most significant falls last year in house prices. I think they will regain their peak prices of 2022 sooner rather than later this year, and the trends are certainly supporting that. And of course, part of what we're seeing driving housing markets, particularly Sydney and Melbourne, is the fact that prices are still below where they were a year ago. So that sort of value equation is keeping buyers interested, that they can buy at prices that are still lower than a year ago. But they know that prices are rising now, and they're rising at a faster rate month on month. So that just does reflect that sort of fear of missing out energy, Michael, that's working its way into demand. And of course, that's pushing up confidence. The question becomes what happens when we do get back to peak prices and that sort of value perception starts to wane, but certainly still driving markets at the moment. The capitals that led markets down last year are now leading markets back out into certainly into recovery mode.
Well, we know that consumer confidence and actually emotion drive our property markets. We get most confident when we're near the top of the boom, which is when most home buyers and investors should be least confident. And they tend to lose confidence when the market turns down, when in fact the downside is minimal. The problem is those who are trying to time the market and get in near the bottom, they've missed it, Andrew.
Yeah, I'm not a great believer of timing. Let's time the market, Michael. I think timing is a question of years and maybe even decades rather than month to month. I mean, if you had to listen to the naysayers last year and got out of the market, you'd be looking pretty silly now, wouldn't you? And again, that reflects, don't take financial advice from those that are predicting severe downturns in the housing market. And of course, that includes the banks. And once again, we've seen this similar scenario as we had through COVID, as we had in 2019, with all the doomsayers proving to be wrong. And as I mentioned also, the unit market, and you alluded to that, Michael, that I guess the unit market is providing options for those that are crowded out of a house market where prices are rising. But we have seen another strong result in the national unit market over May. Again, it's reported 4 consecutive months of quarterly price growth. Melbourne recorded another strong result over the May quarter, up by 1.6%. Michael, Sydney up 1.1%. The smaller markets, Adelaide and Perth, recorded stronger growth over the May quarter, Michael, but they have small sales numbers and they tend to be more volatile from month to month. But again, the value proposition is there for the Melbourne and Sydney buyers, with units in Sydney and Melbourne still below where they were a year ago. And, I think that will continue to create that sort of fear of missing out energy in the unit market. But as we've seen consistently, Brisbane and Adelaide have report the highest growth over the past year in terms of unit prices, up by 4.6% annually in Brisbane and up by 10.3% in Adelaide. So there's no ifs or buts or maybes here, Michael. These are strong results.
I guess it also has to do with the fact that people are feeling confident about their financial futures. The jobless rate is low. Wages growth is creeping up, not a lot, not keeping up with inflation, but the highest it's been in a decade. And that's continuing to support consumer activity. But Andrew, there are some signs emerging that higher interest rates are starting to impact economic activity, with the employment rates marginally higher, but the latest retail sales figures have been flat.
Yes, Michael, we are starting to see early signs, and we shouldn't be surprised at this because interest rates will eventually impact the economy. That's what they're designed to do. This is the plan of the Reserve Bank. Push up rates until we ease economic activity and put downward pressure on inflation. This is one of the strongest economies we've had in our history on the data. We had, record retail sales activity, record retail sales growth. Of course, this has all come out of the stimulus packages from COVID. And of course, we've had this unbelievably low unemployment rate, which is almost unbelievably low at 3.5%. But we are starting to see just the first signs, perhaps, that higher interest rates are impacting the economy. But of course, from a very, very high base, we did see the unemployment rate rise marginally over April. The number of employed fell and the number of unemployed increased. And we also saw a marginal fall in the participation rate. Now, we need more than 1 month here, Michael. We had a similar result in January, and that proved to be not consistent with February and March results, which strengthened rather than weakened. So we'll look to the next month's results for the labour market to see if interest rates are now impacting the economy. And as I said, from a very strong position. But also, as you mentioned, Michael, we've had the first real flat result that we've had in retail sales, really in the post-lockdown period. We had retail sales fall over December, but that followed an extremely strong November, which of course is all about Black Friday. So there were seasonal reasons for that. But this is again the first sign after a slower growth rates over March that we've now had a flat result over April for retail sales. So perhaps these are early signs, and we shouldn't be surprised at this because the Reserve Bank has to keep raising rates to weaken the economy to put downward pressure on the inflation rate. And, we should actually look at this as a positive indication that maybe we can now talk about getting to the end of the interest rate rising cycle, Michael. And, of course, as I mentioned, we need to have a few more months to see some consistency here, but it just might motivate the Reserve Bank to take a wait-and-see approach on interest rates. I think that it's too early to have another pause of official rates. I think we need to see a couple of months of data pointing to a clear trend, but I do think then that the Reserve Bank can be justified in perhaps thinking about pausing rates going forward. And of course, that's good news for housing affordability, Michael.
Of course it is. The Reserve Bank's meeting next week, so we'll be interested to see what they come up with. Philip Lowe, his term is ending in September. I don't think he's want to go out with the thought that he's the Reserve Bank governor who's led Australia into a recession. So it'll be interesting to see how that influences their thoughts. I just wanted to interrupt this week's Property Insider Chat to remind you that this is not specific property advice because we don't know your personal circumstances. But if, like many property investors, you're wondering what's the right thing to do at present, should you buy, should you sell, should you wait, you can trust the team at Metropole to provide you with direction, guidance, and wealth-producing results. Whether you're a beginner or an experienced investor, at times like we're currently experiencing, you need an advisor who takes a holistic approach to your wealth creation, and that's exactly what you get from the multi-award-winning team at Metropole. We help our clients safely grow, protect, and pass on their wealth to future generations through a range of services: strategic property advice, buyer's agency, wealth advisory, property management, renovations, and development management services. Go to metropole.com.au and explore your options with the complimentary Clarity consultation. But getting back to the property markets, we regularly keep an eye on the auction data. You report it in great detail every Sunday on your LinkedIn profile. And we like to see that because it gives us an indication of what's happening on the ground. And boy, are the auction markets pointing to a strong winter season.
Well, it justifies us examining the auction market results every week, doesn't it, Michael? Because we've now got price data that supports this. So really the price data is now following the auction clearance rates in a way. And because, obviously these strong results are reflecting strong clearance rates. And, all those that measure auction results on weekends are coming up with the same results. It's a very strong market. We still haven't breached that 80% clearance rate, Michael. We're inching our way towards it, or if we could say moving by millimetres towards it in Melbourne and Sydney. Will June be the month where we actually get an 80% clearance rate in Melbourne and Sydney? Certainly the momentum is there, the confidence is there going forward, and we've really still got 4 weeks left in the season, the autumn selling season, before the real winter market descends upon us and people start to look at other things and wait for the spring selling season to make their property decisions. But it'll be interesting. I'd be surprised, I think, given the momentum in the market, Michael, that we don't get an 80% clearance rate. But we'll wait and see. We've been very, very close to it over the last few weekends. Sydney had a 79.8%. Doesn't get much closer than that, does it, Michael?
No.
Last Saturday, which followed a 79.4% the weekend before. Melbourne up to 78.6%, and it followed a 77.9% the weekend before. But all results are strong. It's interesting, Michael, that the underperformer has been that Canberra market, which was probably the last to enter a weaker phase in its market last year. And it does tend to lag that Sydney market to some degree, but it's now starting to pick up. Its clearance rates were sort of stuck in the mid to high 50s for most of the earlier part of this year. But now they're starting to move up into the 60%, and they've been 60 to 70% over the past couple of weekends, Michael. So some signs there that Canberra is starting to follow that Sydney market upwards. But all markets are recording quite strong results. And I think we can also take note of the Brisbane market, that I think is coming out of its recovery phase now. Again, that was later compared to Sydney and Melbourne because its boom was stronger and lasted longer. But it's also signs that that Brisbane market is now starting to pick up as well, that Brisbane auction market. So no surprises with the May house price results being strong, because we've seen these very strong clearance rates. So we won't use that B word quite yet, Michael, until we sort of get an official justification for it. But I think once we start getting consistent 80% clearance rates, we can start talking about being back in a boom. And how remarkable is that, following all these interest rate increases, following all the negativity that was clearly driven by the ridiculous, foolish predictions of house price crashes. And obviously that has an impact through the media. But again, what we're seeing is the back end of that, because those consumers that I guess predictably sat on their hands through winter last year as all those ridiculous predictions were being made, are now getting back into the market. So we have, that level of pent-up demand that it is adding to demand, the pent-up demand from last year. And of course, the other factor clearly, Michael, is population growth, which is a key driver of housing markets as well.
Well, that means that moving forward this year, that surging migration at a time when we've not got enough properties in the rental or the sales market is only going to push prices higher. Buyer confidence is back. Seller confidence is returning. All this suggests, as you said, that we are, again, soon going to reach the peaks that we had in 2022. Yes. I think the main factor is really going to be what's going to happen to interest rates as the cycle continues on.
Yeah, and this is the point. I think that if we do get a couple of months of easing labour market activity and retail sales activity, we've got to remember that the results will still be very, very high. The wages will still be rising. And there's a lag in wage growth, Michael, that doesn't account for issues such as interest rates, which tend to be judged on a monthly basis, or, sort of real-time retail sales. But so wages are sticky, and that's one of the reasons why we haven't had as high inflation perhaps as some of the other similar economies have had, such as the US, because it takes some time for our wages to adjust, because we have typically annual wage reviews. So those wages will continue to rise, Michael, even if we start to get a flattening in interest rates. So it's actually, the positives are still there going forward. And maybe if the Reserve Bank decided to pause interest rates, obviously it would be doing a favour in terms of affordability, but there's still some improvements to affordability coming through in terms of a low unemployment rate and higher wages.
Well, thanks for being first once again with the end of month reports. Look forward to catching up with you next week for our regular Property Insider chat.
Thanks, Michael. Will we get 80%? Fingers crossed, perhaps.
Wait, we'll see.